everything anybody does in the markets, it's reflected through price. I mean, you can't hide. I don't care who you are or what you know or if you're the most informed trader in the world. If you're going to enter orders into that market to take advantage of what your superior knowledge is, it's going to show up in the charts.
That was our guest today, Jack Schwager, best-selling author, educator, and market professional. Welcome, everyone, to another edition of TradeStation's Trader Interview Series. My name is Michael Burke. I'm Vice President of Client Training, and I want to thank you all for joining us today. Today, we have Jack Schwager with us. Jack has written some of the most influential books on trading and traders, and is a sought-after speaker all over the world. He's also founder and Chief Research Officer for FundSeeder, an exciting project which looks to find undiscovered trading talent. Jack, I'm sure I left a few things out, but thank you so much for joining us today.
Yeah, I appreciate it. Glad to be here, Mike.
So Jack, tell us a little bit about your background and how you got started in the markets and trading.
Okay, so I've been around for a long time, so I'll try to keep this short and not try to cover everything. But bottom line, I actually fell into trading by accident as with a graduate degree in economics, looking for something analytical to do, and I happened to interview for a job as a futures research analyst and got it. And that's how I basically fell into the markets. I had no participation in the markets prior to that point. So it's complete fate that I ended up here. As far as career, I spent over 20 years on Wall Street as Director of Futures Research. I've also spent a decade as a partner in a hedge fund advisory firm. Actually, it was a London-based firm, which eventually got acquired by a UK merchant bank. I was the only US employee. In addition to that, of course, I've been an author throughout my career. The Market Wizard books are probably the ones that are best known. I've also done a number of analytical books. My first and actually my most recent book as well, because I redid the first book, A Complete Guide to the Futures Markets. So that was the first book in '83, written in '83, published in '84. And then reissued as in a new version on just January of this year. And I've done other stuff as well at FundSeeder, as you mentioned, which we'll probably talk about, so I don't have to go into that. And that is a short summary of my career.
Did you have any mentors in those early days? What book did you read?
Well, the one book I do recall that there was an influence was Reminiscences of a Stock Operator, which I do mention in my own Market Wizard books. It's a book that was mentioned by quite a number of the market wizards that I interviewed as being instrumental in their, education in the markets as well. It's a book for those who are not familiar. I think a lot of your listeners may be familiar with it, but for those who are not, it's a book written actually back in the 1920s. The protagonist, it's about Jesse Livermore, although he's never named. It's written as if it's Jesse Livermore himself talking, but it's written by a true journalist and author, not by Livermore, a fellow by the name of Edwin Lefebvre. So it's one of the classic market books. That was one book that was certainly an influence. Basically, though, I'd say the largest influence on my own analytical approach to markets, particularly from a technical side, would have been a colleague who I worked with named Steve Kronowitz, who also became a very close friend and unfortunately passed away about a year ago. He was a technical analyst that worked for me when I was a research director. I noticed that he was the only analyst who was actually making money. And I, coming from an Ivy League economics background, sort of had a cynical initial view about technical analysis, as it didn't seem like very rigorous or anything like that. But through Steve, well, first of all, I could see that what he was doing was working better than fundamental that were working for other people, including myself. And so I was open-minded enough to speak to him about it. And I got to understand the rationale of why it works, namely, basically, everything anybody does in the markets, it's reflected through price. I mean, you can't hide. I don't care who you are or what you know or if you're the most informed trader in the world. If you're going to enter orders into that market to take advantage of what your superior knowledge is, it's going to show up in the charts. So there is a real strong rationale for saying why technical analysis can theoretically work. It's completely different than some random process like numbers on a roulette wheel or something like that. Naive people sometimes make the comparison, but it's completely wrong because the numbers in markets reflect real markets, real fundamentals, and real people operating in those markets. And Steve also kind of gave me the basics of technical and chart analysis. And from what he taught me and my own empirical observations, that basically formed my knowledge of analytics, technical analysis. This tome that I originally wrote, which I redid very recently, I mean, that has hundreds and hundreds of pages there on technical analysis. And that, I would say, really came primarily from my initial influence with Steve and from my own observations. It wasn't that I really did a lot of reading on technical books, and I'm almost embarrassed to say I didn't read the classical books. That's the story.
Jack, let's talk about that new book. It's still sitting on my desk, and I don't think I'll ever take it off of my desk. It covers literally everything a futures trader needs to know. It's part reference and part how to trade.
That's exactly, in one short sentence, I couldn't do better myself. That's exactly right. A reference guide, certainly, but very, very importantly, thematically, the book is about using analysis trade. I would say that what I would think is a difference between, say, this book and a lot of other books that are out there that may cover some of the same material is that I try to really maintain a very real perspective about practical applications and the real world. So for example, I might have I'll discuss chart patterns like a lot of technical analysis books will, and so that's not in itself unique, but when I do discuss them, I don't just like provide these nice examples of how everything works and boy, this really seems great. You draw a trend line and boom, every time it comes down, trend line you're buying, all that. So that's not what I'll introduce, let's say, trend lines as a concept, but then I'll show, well, that's all fine and good, but in the real world, trend lines get broken all the time. And then I'll show people like real charts, So the trend line looks like this, then 2 months later it looks like this, and 2 months later it looks like this. And you go back 3 years later, you draw a nice trend line, and it looks like it worked. But the truth of the matter is, if you were going through that in real time, you would have been knocked out time and time again. It doesn't work, not in the conventional way. So then I will provide other aspects to it, such as other concepts of something I call internal trend lines, which I don't know if it was original to me or not, but it's something I came up with 30 years ago, and if other people can come up with similar ideas, I don't know or not. Like I say, it was mostly a matter of my own empirical observations and stuff I learned from Steve. But in any case, so I found like internal trend lines, which I described in the book, actually work better than regular trend lines. And I also found that it's not so much the patterns as working as they're supposed to work, but it's then the way they work when they don't work. So trend lines are actually a good example. Very often real trends, long-term trends, you'll break the trend lines, the existing trend line, many times throughout the course of the trend. But what is really good is you can then let's say you're in an uptrend, you break the trend line. Okay, let's you get down the trend line. Conventional application of chart analysis, say, okay, you buy. Well, and then you put a stop in somewhere below the break of the trend line. You buy, then the market goes below the trend line, you get stopped out, you have a losing trend. What I suggest instead is don't use trend lines that way. One of the ways I recommend using them is, let's say there is an uptrend and you're looking to get in. Okay, wait for the market to actually break the trend line, goes below the trend line, and then goes back above the trend line and has a specified number closes above the trend line. So you have a failure of the trend line followed by a reversal back to the main trend confirmed in some way. That actually is a good reentry signal, and it also has a natural stop, which is the dip, which is the low of when you broke the trend line. So there you're taking the trend line and you're turning it's on its head. You're not using it, you're actually trading with the trend, but you're not buying in the conventional way with a pullback to the trend, but you're actually using that chart pattern in the way I just described to give you a way of getting into the market mid-trend on a reaction and on a confirmation of the presumption of the trend. So that's what I would give as a good example of real-world, practical, useful application of a conventional chart pattern, where the conventional stuff really is not good by itself. You really have to combine it with practical applications that take into account the real world.
It's interesting listening to you talk about trend lines there. Every trade has a number of elements to it before you actually make that trade. And in this case, we're talking about the elements of a trend line. The book, though, gives you other elements that you can build into that story. For example, you show seasonal chart patterns for almost every future. So you can start to put together combinations of these ideas until you have a story that makes sense for a trade in one direction or the other.
Well, sure. That's another element is I do try to cover lots of different approaches and methods. So yes, you can use like season analysis as one more input, but even within chart patterns, no chart actually has one pattern. There's always multiple patterns. And also very, very important, as I just was talking about, is not just the pattern, but failure of patterns can be very, very significant, more so than the patterns themselves. So you take all those things in combination. So you have a chart, you might have multiple patterns, you might have failure patterns that are significant in a non-conventional way and so forth. So it is a bit of an art, but what I try to do is provide readers with all these different tools and some sense of how you can reasonably apply these tools in a real world sense. So again, very important for me to show ways when these tools don't work in a conventional way, as opposed to always using glorified examples. In fact, I don't know if it's an entire chapter, but at least it's a good section of one chapter. Maybe it's a full chapter, but I call the well-chosen example. And it's trying to get people to understand when they're reading books in general and they see these nice examples, those are not representative. They're well chosen. They're chosen because they fit the approach perfectly. But in the real world, it doesn't work that way.
That's a great point. Jack, you've got this exciting new project, FundSeeder. This is a project that's gotten off to a great start. You already have a good number of traders on your system. Where did this idea come from, and what need does it fill?
So the original idea is from Emmanuel Bellari, who's co-partner, who's actually the founding partner in FundSeeder. I and James Biggs, who's founder of a firm called Turnkey, are the other partners. And we each have our own roles. But basically, the idea that Emmanuel had, and when he pitched it to me a few years ago, I said, boy, that does sound like a good idea, was this, that we've gotten to a point in the world, financial world, where a very, very small number of traders basically get almost all the assets. And yet you have trading as a global endeavor. There are hundreds of thousands, millions of traders worldwide, and lots of good ones. Even if you only took a fraction of a very small percent of traders being good, of 1% being good, you still have a ton of very good traders who will never see the light of day, even if they're talented, because they just don't have the connections. They may be in country, they may be in other countries which don't have developed financial markets and investors, which is true of most countries. And so Emmanuel's idea was to create a global sort of central marketplace which would connect skilled traders, undiscovered skilled traders primarily, with investors looking for new trading talent. And that's the niche that FundSeeder seeks to fill. So FundSeeder, there's actually two companies. There's FundSeeder Technology, which is the fundseeder.com site, which is what you're familiar with and which is out there. That company doesn't have any investment function, therefore, because the regulatory requirements are all fulfilled by the sister company, which is FundSeeder Investments, which I'll leave aside for the moment, for now. But to discuss the basic site, what it does for traders is two things. First of all, a website that allows traders to link their accounts, and then I would add here that TradeStation is one of the brokers who can directly link into FundSeeder. Therefore, set up their accounts so they're being verified daily because the data is coming from the broker, not from the trader. But more importantly, from the trader standpoint, they can then apply all sorts of analytics and charts to their own numbers. So they can generate equity, their own equity chart, get all sorts of stats. They can do stuff like underwater chart on their performance. They can do rolling indicators of various, whether a rolling indicator of return, a rolling indicator of a Sharpe issue, or any other statistic. It has a tremendous amount of functionality. So you're providing traders with a whole sort of toolbox of charts and analytical tools that can be used to analyze and hopefully improve their trading by better understanding where their trading is working and not trading. There's also per trade analysis there. And even I would just give for a while, there's too much to go into all the detail, but just to give a feel for how sophisticated this stuff can be, there is a tool that we have which allows traders to apply various technical analysis tools to their equity chart. So they can, say, do a crossover moving average over their equity chart, define the parameters, and see what would happen if they stopped trading every time their equity had a downside breakout and resume trading every time their equity had an upside breakout. And for a lot of traders, they might discover that, wow, by stopping the trading when their equity is starting to trend down and resuming when it's starting to go back up, they could actually tremendously improve the return risk of their performance. But the research tool to do that, not only of course over moving averages, but breakouts and other methods is there. And I would add that all of this stuff is there for free. But our interest is to entice as many traders to this website globally as possible because we are seeking the best trading talent. That is the real function, and that trading talent then will get used by our sister company, which is Fund Seeder Investments, which will be looking for traders to allocate to, both for products it might sponsor, such as, say, an emerging market fund. Also, it will be working with institutional investors who are looking for talent, and Fund Seeder Investments can be the go-between between the talent discovered by Fund Seeder Technologies and the type of talent that these institutionals are looking for. So we see ourselves as sort of the connecting link, by we I mean both companies, as a connecting link between traders globally, and I mean, when I say globally, I mean everything, Asia, Eastern Europe, anywhere, it makes no difference. We have traders from more than 100 countries signed up. So connecting those traders with institutional type investors, and so that's our mission.
These traders are primarily trading futures, or are they equities and equity options? Is it the whole spectrum of asset classes?
Yeah, they're everything. They're equities, they're FX, they're futures, they're multiple assets, they're options, so they're everything.
These traders are primarily technical, right? Or are they blending technical and fundamental?
In fact, we have traders self-define themselves as being either fundamental or technical or both. They can check both, but that's true for some traders. And we also have them define themselves as systematic or discretionary. Basically, they can be in any or multiple of those categories or any combination.
That's interesting.
So we don't care. We don't care what your approach. We don't care what the trader's approach is. Basically, as long as they are trading liquid markets and they've got real track records and they are showing obvious skill, and by skill, through return risk statistics, that's what we're looking for.
Okay, good.
For a trader, it's really a no-brainer. First of all, there's this whole set of free analytics, and I would also add that the site is very user-friendly. So you go on there and, let's say, any statistic that we have, you're not sure what it is. If you just put your cursor over it, there'll be a question mark, click it, and it'll give you a definition. So everything on the site is well-defined and easy to use.
Yeah, I think it's a great resource available to traders. It's amazing, really. So since we're on the topic of providing these kinds of tools for aspiring traders, what advice would you give to an aspiring trader out there?
Okay, so this is going to be self-serving. I apologize for that. I feel okay saying it because so many other traders and managers and hedge fund managers that have told me this that I feel it's okay. Actually, the Market Wizard books, for example, are a good starting place because they have a lot of good advice. And it's coming not from me, it's coming from great traders who are providing that advice through the interview. So one good thing I think for beginning or experienced traders is a lot of information in those Market Wizard books. I also took 50 lessons from the Market Wizard books and made them a chapter in this complete guide to the futures market. So there's a whole chapter just of a fairly substantive chapter just on advice from the Market Wizards. So those are good resources. Now, for a brand new trader, I would have some advice right off the bat. Start off with a small amount of money because probabilities are very large that you're going to lose it. So you might as well get your education with a small amount of money rather than a large amount of money. Second piece of basic advice is trading success is not about finding the perfect methodology or system. It's more about risk management, something you can learn through the risk for the books I've mentioned. But that's also just a short statement that I think beginning traders don't understand, and it is good that they should be aware of that. And all great traders will tell you that the risk management is more important than the methodology. I personally, one thing I've always done, which I think is probably good advice for beginning traders, is my method is whenever I come in and out of trading, depending how busy I am, what my interests are, or whatever, so it's not a permanent vocation for me. But whenever I start trading, I always start with a small amount of money. Then if I can't lose very much, because by definition I start with a small amount, and if it's going well, I may add and whatever. But that's one way of avoiding having any large losses is by beginning with a small amount of money and waiting to get some cushion before you start trading more aggressively. So I think that's a reasonable approach for a beginning trader to do. Also, for beginning traders, read, whether it's my own books or other books that interest them that are pertinent, and then observe and don't start trading until you have some sort of methodology. So Once you've kind of gotten background, and by the way, you will find, and I'm talking now to traders directly, you will find that certain approaches just ring right and some don't. It doesn't mean that they're right, some are wrong, or that there's any list that you could say, these are the right approaches, these are the wrong approaches. I've had great traders completely disagree on approaches, but every trader will have an approach that works for them. So it's not a matter of finding the one secret approach, it's a matter of finding what's right for you. And so as you go through material, certain stuff will resonate and feel more comfortable and feel like it works or makes sense, and that's what you go with. And the stuff that doesn't appeal and doesn't feel right, it's against your nature. You won't be able to make that work because it's against your nature. So a very important part of becoming a successful trader is discovering actually what feels right, what works for you, and you need to have that discovery process and have a defined methodology before you risk $1. And while simulated trading or paper trading is certainly not the real thing, and you don't have the same emotions, but if you can't make money on paper, there's certainly no reason why you can make money with real money where your emotions are at stake. So that's kind of the step-by-step process, I would.
I agree completely. What's implied in that is also just small trade size. You don't want to borrow a small amount of money and then lose it all on one trade. You want to have a reasonable risk management scheme in place, even if you're trading a small account.
Yeah, and that reminds me, I'll throw this out as an anecdote, which I actually found interesting, and which speaks right to that point. Get to what the connection is in a moment. About a year ago, I had the rights. I got the rights back to the new market, which was the second market, was a book. I had the audio rights for that. And so that was one book that did not have an audio to it. And so I got instead of having a publisher pick the narrator, I went through the process where I signed up with ACX, which is part of Audible. You get to choose, narrator, put up the posting, and you kind of audition different narrators. And I got a bunch of really great narrators. I finally narrowed it down to one. The interesting thing was the only thing in the book that I kind of felt a little bit uncomfortable at all about that had to do anything with trading was the one spot I said, giving advice that at the end, summarizing stuff, that you should limit your risk to no more than 1% to 2% per trade. Why that is marginally wrong is because that's probably too aggressive. As I've gotten older and more experienced, I now believe that the correct number should be less than 1%. So ironically, out of this whole book written over 25 years ago, the only trading thing that I think became slightly obsolete is that I was a little too aggressive by saying 1% to 2%, where it should actually be less than 1%. Yet novice traders will think that, no, I should put 10% on a trade. Oh, no, you shouldn't, because probabilities will kill you. So you really need to be trading very, very small amount of your money on each trade.
Exactly. Well, Jack, I want to thank you for spending the time with us today. This was incredible. For those of you listening, you can discover more about Fundseeder at fundseeder.com, and of course, you can check out Jack's books on amazon.com. So thanks again, Jack.
Oh, appreciate it. It was fun doing. Thanks, Mike.
Thanks everybody for listening, and be sure to tune in and subscribe to our TradeStation podcasts. And of course, don't forget to visit our website, www.tradestation.com, to learn more about our outstanding educational resources and online brokerage services. Have a good day, everybody. Thanks again, Jack. The preceding podcast was for educational purposes only. All of the symbols and trading ideas discussed were for educational purposes and were not recommendations. Active trading is not suitable for everyone. You can find additional disclosure information on the TradeStation website. That was our guest today, Jack Schwager, best-selling author, educator, and market professional.